What? Hello. Welcome.
Hey there, Miss Darcy.
How are you?
Amazing.
I'm Darcy Stratton. I'm a realtor with the XP.
And I'm Alicia Blackwood with Cross Country Mortgage.
We're your wild and crazy cowgirls in real estate, and we're super excited to be here today. This is our first ever podcast. We're excited for you to listen. We're going to share some pretty good stuff today.
Absolutely. A lot of knowledge, inform everybody about what's going on in the real estate market.
We're going to make our own TikTok videos while we're talking to you.
I don't know about all that, but hey,
I've never been on there, but I just saw my first video and my day has been changed.
Oh my God. So, Miss Darcy, one of the things that I thought was super important so everybody listening could get to know you and I is tell us a little bit about what got you into real estate, who you are, and why you're here.
I love it. Okay. So I'm going on my 13th year of real estate. When I got out of college, I was a lender like Miss Alicia. I worked for a big bank, Washington Mutual, for 5 years, and then the market crashed. And you couldn't get a job anywhere. I lost my job. And if you were a mortgage person, it was super hard. So I went back to what I knew, and I was a teacher. I was a 7th grade teacher, made $32,000 a year, baby. Brought home $900 a month. It was very humbling. And I loved it. It was a great job. Then I got pregnant with my son, and I'm like, okay, I got to be creative here. I got to figure out a way. My husband's like, can you just bring home like $1,000 a month? I'm like, sure, I can do that. So I got my real estate license. And then I sold 8 homes my first year.
Wow, that's actually really good.
It was pretty fun. And I just had a baby. So it was all short sales, all foreclosures. And then I just took off from there. But my mom on as my partner like 7 or 8 years ago. And now here we are today. And I love it. It's so fun.
Your mom's a firecracker.
I know. She's hilarious. I created a real estate maniac with her. I love it. She wears the name badge. She looks perfect all the time. I come in hot with my hair to the side. I'm all sweaty. I got
Cowboy
kid crumbs.
Boots, yeah, button up. I love it.
Cowboy boots on. So how about you, girlfriend? Tell us about you.
Oh, goodness gracious. Okay, so I have now been in the lending industry for 20 years. I was literally
cool.
20 years old when I started, 40 years old now. And what's kind of comical is I had worked at NEC Electronics building microchips, and they did this huge layoff. And the brilliant child I was at the time decided to quit my job a week before they were going to lay me off and give me a severance. I thought, you know what? It's my birthday. I don't want to go to work today. I quit my job.
Yo, shorty, it's your birthday. Gonna quit my job. It's my birthday.
Great 20-year-old decisions, you know. So for the most part, I thought, what do I like to do? I got to get a job doing something that I like to do. And in the past, I had done some telemarketing, and I loved talking on the phone. It was one of my things I loved to do. And at the time, my experience was selling home siding.
Okay.
And selling timeshares. Okay?
Wow.
So as far as getting beat up,
that's hard.
It's very hard, and I was actually really good at it, believe it or not.
I can imagine.
I'm like, shoot, if I could sell timeshares, I could sell anything.
Yes, you can.
So I went to a temp agency, and I'm looking for a job, and they go, okay, we'll let you know, and we'll put your resume out there and see what we can find. So I get a missed call on my home phone, and it says Sacramento Home Loans. I'm like, interesting. I call the phone number back, and they're like, oh, it must have been the telemarketing department. I'm thinking for a job. Mm-hmm. They were actually trying to sell me a home loan. So they put me through to the telemarketing department to Kim Stevens, and I'll never forget her. She's still one of my favorite humans on this planet. And she picks up the phone, and I start selling myself. I'm like, I got experience. I could do this, you know. And so they invite me to come in for an interview, and I'm sitting in the lobby. And the owner walks in, he's like, how fast can you type? I'm like, hey, I can type fast. So they give me the job, and I moved my way up. It took about 10 months before I became a loan officer. And I think the most significant thing for me is it gave me life purpose, because my mom was always one of those people who I felt got kicked down left and right in her life. If it wasn't one thing, it was the other. And she dealt with some mental illness, and what was a struggle I felt like is she lived her life for the most part on Social Security, and I just felt like she kind of always got the short end of the stick. So in my new found job, I was able to help the little guy and help them get ahead, help them get a house when everybody might have told them no.
Yeah.
I could make a dream come true, a significant dream of a home ownership, and help that little guy. And I always told myself, no matter how big I got, I would never forget where I came from, and I would never forget the little guy.
That's so good. I love that.
It was so
Never
impactful.
forget the little guy.
Never
I love
forget
that.
the little guy. You know, a lot of times, you know, and this is what I notice even to this day, because now I've reached a pretty high level of success, and I wear a Rolex. It was my gift to myself when I hit 100.
Hell yes, you do. It's badass, sister.
Yeah. But I go into the store and I can see the difference people and how they treat you depending on the type of purse you have or the type of jewelry you wear. But the real reason, you know, that I love wearing this is I go into shelters and I'll speak to women that have been through a lot and are just trying to turn their life around. And I show them, I say, look, I come from where you are, and I've been who you are. I remember I did that at St. John's in the last couple of years, and I loved saying to them, hey guys, I went to juvenile hall 50 times. I was not some, you know, I didn't grow up with a silver spoon.
Yep.
It wasn't easy for me. But just like them, you can take a hard right and turn your whole life around. And that's why I love it. You know, giving a hand up to people, that's my why. It's making a difference in someone's life, and I get that opportunity every day. And I've done my job for 20 years, and I get just as excited now as 20 years ago.
Heck yeah.
It's so much fun.
It is.
So
It really is.
Being a mortgage lender to me is so much more than just pushing a file through. It's changing somebody's life, and it really, truly was a blessing. And
I
it
agree.
changed my whole life around. So
Yeah.
it was a gift. And the funny thing is, I do everything I can with everyone I talk to try to convince everybody to be in the mortgage industry. I'm like, if you're detailed, should become a processor. Or
Yeah.
if you like to talk to people, you should become a loan officer, because there is no ceiling in real estate.
Yep.
As a realtor or a lender, you can make whatever income you want. I have friends and mentors that make $11 million a year, or if somebody wants to work part-time, they can make $50,000 a year.
Yep. Absolutely. Yeah.
So it's not limited or controlled by any quote-unquote boss.
Yeah.
You are your own boss. And so that's what I think I love the most. And if you want to take the time to roll up your sleeves and help somebody, you are in control of that.
And I think if you keep that always in your heart, that's what will always make you successful. You know what I mean? Like, that's your purpose. That's your thing. It always comes from goodness.
And it allows
a lot of
you
people,
to pay it forward.
Yes, because a lot of people forget that in this business. You know, we see a lot of people where we're like, ooh, gosh, what's their real intentions? You know, and they're not coming from that good place, because sometimes this success can get to them. And instead you're remembering where you came from, you know?
Well, because I was a little bit of a riffraff in high school,
No.
okay, to put it nicely.
No. I don't believe it.
When I first started in lending, I was fixing people's credit left and right. And, you know, the truth is I learned it from my mom, because my mom would sit on the phone for 5 hours with Sprint.
Would she?
Over a bill.
Love it.
That they mischarged her. And no kidding, she got them to pay her an hourly wage for how many hours they made her wait on hold.
Oh, she's
one
brilliant.
day. Oh, she was the crack up of my life. And I sat there, I'm like, what do you mean they paid you like $50? Because they made her wait on hold so long that once she won this little argument with them, she made them credit her, you know, this $50. And
Brilliant.
Go, Mom! You know? And so from the start of my career in lending, I realized that if I fixed clients' credit, I would never run out of customers.
Yes.
And those were the most appreciative clients. I mean, they never forgot me, and to this day, 20 years later, they still come back to me. You build a bond, because a lot of times they'll tell me other lenders just brushed them to the side, or their file was difficult and they didn't put any additional energy into them because it was a little bit of elbow grease, you know? And so for me, I loved being able to help them increase their score, and it not only helped them with the housing, but it helped them in anything they ever bought, whether it was a car or getting a credit card or just the progression of their life. And so that is my why in real estate.
So good. And would you ever change the way you grew up?
Absolutely not.
Me either.
No.
I grew up in a trailer. I actually didn't even know I lived in a trailer. I lived in a double wide. I thought it was a house till I was 15 years old. And people would be like, you live in a trailer? I'm like, no, I don't. It's a house.
Was it a manufactured home?
No, it's a straight up double wide trailer.
Hey, you know what? Whatever.
2 bed, 1 bath. I love that thing.
It at least it reminds you where you came from.
It's beautiful.
It's a bigger success on where you are now.
Yes, it's a beautiful thing. And I love that humbleness. I want my kids to always feel that too. I think it's a really important thing, like humbleness, integrity, respect. So I think with our upbringings, it helps us so we can give. So we're here today as our why too, to give back to you all. We want to share with you what's going on in the market coming out of COVID, right? Because things are changing, and we want to help people, business owners, first-time buyers, everything, and we want to make you laugh too.
Yeah.
Right?
A little bit of craziness. I have to admit, we're pretty dang crazy.
Okay, can I tell how we met?
Yes, please.
Okay, because we were talking about it. She's like, I don't remember. I'm like, I remember. Okay, so I'd been like an agent for maybe 5 months. Keller Williams. I worked over there in Roseville. And Brent Go's been my mentor for like 13 years. And Brent's like, have you met Alicia? She rides horses. And then I saw her and I was like, oh, we're meant to be friends. And then we just started riding horses together like immediately.
Oh, I believe it. I'm obsessed with horses.
It was great. So that was it. And then we've been riding together probably 12 years. And then we've been working together the whole time too. So it's worked out great. And usually our clients, we have similar personalities. So our clients get along great with both of us.
Positive, energetic.
Yeah, a little out of control.
Crazy.
Don't like it when people tell us no.
Very, very stubborn, I have to say. Very, very stubborn. Don't take no for an answer.
So good, so good. Okay, so coming out of COVID. We're being positive here. So we're coming out of COVID a little bit. The market has been crazy in real estate. I mean, we've seen at least a 5% increase. I thought for sure when COVID hit, we might see a decrease, but it's been the complete opposite. Interest rates have gone down. And I don't know what that was.
I think it was a computer.
Okay.
I don't know.
I heard a sound.
Celebration.
Interest rates have gone down. Inventory is not going up. And the Bay Area is moving here to the Tri-County area. And, our whole market has just been, to get a home, it's been a little bit of a challenge. I mean, it's happening. So I know on Alicia's end, she kind of had something different. She had the restrictions were tightened with the lending world. And now we're seeing a shift, right?
Yeah, so to give everyone an idea as far as lending, back in March when COVID first hit and everyone went on lockdown, lending tightened up insanely. Banks did not know what to do. They're like, wait a minute, all these people cannot go to work. They have no income. How do we underwrite with the predictability of income when the government is telling you can't go to work? So they put all these restrictions in place, very tight restrictions quickly on a lot of different industries. So now that months have gone by and a lot of businesses have elected to participate in the PPP and have continued to be able to run. Now,
is that okay, the PPP?
It's absolutely okay.
All right.
So the good thing about banking now is the lending world is not punishing you for participating in the PPP loans that they were doing.
Okay.
It's also not punishing you for the deferments that a lot of people elected to participate in. Now, if you have a standard type of mortgage and, a lot of times all you had to do is call into the mortgage and mention anything and they were deferring you automatically, even if you didn't even want to be deferred. And so some clients are like, I didn't even want this and they just told me I didn't have to pay. So what's happening is those clients are turning around and wanting to do a refinance. And so if you have a regular mortgage, the bank is saying you have to catch it up first and bring current those deferred payments before they will allow you to take advantage of these low 2% interest rates.
Okay.
Because across the board, rates are in the 2s for every type of mortgage you can get.
Unbelievable.
VA, conventional, USDA, FHA, they are all in the 2% range. And that is even on a 30-year loan.
Unbelievable.
On a 15-year, I am literally seeing rates in the 1s, no kidding, 1.75.
Have you ever seen that?
Not in 20 years of
I've
doing
never
mortgages.
seen ones.
Not in 20 years of doing mortgages. And so, as you can imagine, every lender across America is slammed out of their minds.
So slammed.
So slammed.
Things are taking longer. People have to have grace. They have to have grace. I keep saying that.
They have to have grace. Well, One of the things I'm seeing, like our bank in particular, is giving free 14-day extra turnaround time on your lock. So if your lock is priced at a 30-day, they're allowing up to 44 days at the same cost.
I like that.
So they are giving more room, and that way, if they're taking a little bit longer, it doesn't affect the client. But what's really nice right now is they're just starting to relax the guidelines back up.
Okay.
For a minute, they took away jumbo loans. For a minute, they really restricted the loans. And just this week, we're seeing they're allowing again these jumbos with lower credit scores. They're allowing again self-employment loans where they only require you to qualify on your 1099.
Woohoo!
Now, in 20 years, I haven't seen them offering programs like that with these low of interest rates. They normally penalize you and increase the rates quite a bit, but the rates they're offering, it's insane. But I think they really want to get clients back out into the market. Now, again, the biggest hurdle we've seen, and I know you've firsthand been experiencing this, is just this lack of inventory.
Yes. Yep.
Yeah. So if you're out there in the Sacramento, Placer County, heck, any area in California, please sell your house. No.
Seriously. If you have a horse ranch, I have like 5 cowgirls looking for a horse ranch right now. But I had one, Alicia, my clients had cash, and we were beat out 3 times. They didn't even care if it was all cash anymore because someone ahead of us was going to pay $100,000, $200,000, $300,000 over asking. They didn't care. They get a loan and they pay the cash for the difference.
Yes.
So we finally, after our 4th home, and it was of course the right home, because the right home always works out. I tell people we miss out on a home and they're devastated, and I'm like, don't even worry, because that wasn't the right home. And we get the home that they're meant to have. And I literally told the agent, I'm like, everything is booked. All the inspections are done. We are not missing out on this home. I'm going to go put the pending sign out for you right now. Like we went $150,000 over asking. We were not messing around. Yeah. Like here's what we're doing. And we got it. So, it's just crazy. It's a little crazy.
And just hitting on that just a little bit. If you're out there and you're trying to buy a house and you are having a hard time getting into contract, there is some little secrets that you can utilize to make your offer more attractive than anybody else's. Let me give you some examples. So a normal contract, when an offer is written, automatically it comes with 17-day contingency period. What does that mean? That means when you put a deposit on the home, after 17 days, for example, if the appraisal isn't back, you only have up until that 17th day to argue with the seller or negotiate the appraisal and ask for a negotiation of price. And then you only have up until 17 days to back out based on the appraisal or the loan approval. So it tends to be a loan approval or an appraisal contingency, or they call it an inspection contingency. Okay?
You have 3, yep.
So after that standard 17 days, your earnest money deposit becomes at risk, meaning the seller can keep it if you back out after that point. So basically, if you're trying to win, be brave, be bold, offer a 7-day loan contingency.
Heck yeah.
Now, appraisal contingencies, if you're putting 20% down, I am getting appraisal waivers on 90% of my clients that are putting 20% down. So there are little secrets that you can waive your appraisal. You can waive those contingency periods up front, but you got to have that lender run your address. It's all based on the address. It's house specific when it comes to that appraisal. But any lender, especially on a purchase right now, should be able to get you a loan approval easily within a week, no problem. And if they can't, get another lender, okay? Because you have to be aggressive. So another little tip that you can do is when your offer is written is have the lender call the listing agent.
Yes.
If the lender proactively calls the listing agent and I'll say things like, hey there, I'm super excited. I'm calling about Mr. Smith, our mutual client. Darcy Stratton recently wrote an offer for our clients. I know she said she submitted about 5 minutes ago, and I just wanted you to have my personal cell phone. You can text or call me here anytime. I just wanted you to know my client has long-standing employment. Their credit score is 750. They're rock stars. Their debt to income is amazing. And their file's already DU approved. Now, the key word they heard was approved. Now, an automated approval, it takes me 5 minutes. So for me to say that, it gives the listing agent peace of mind that this loan is solid. Not only that, half the time they're calling the lender and they can't even reach him for days. So if the lender's proactively reaching out to that listing agent, you already have 1 foot ahead of the other guy.
Yeah.
And so those kind of little tools, like what are some other tools? I know you're really good at this, Darcy, but what are some other tools you've used to win above everybody else?
I love that one because it makes us feel like the lender's not hiding behind anything. So we want to hear communication. That's a big one. So, I mean, it's very common right now, 7, 12, 22 offers. So how do you stand out? You know, because when you start looking at 22 offers, 12 of them are going to be pretty much the same. You're going to have 2 that are really badass and like 5 that suck. So how do we stand out? So this is just between us. Okay. This is a good one. Okay. We have a home. There's 22 offers. This happened in Auburn. And it's a cute bungalow and everybody wants it, right? How do we know what the top price is? How do we know? You know, you're telling me, hey, I got some extra cash. I'm willing to do this. I'm willing to go over. We just don't know how much, right? So we can say we will pay up to $1,000 over the highest offer that is brought in by the certain date and a buyer at a certain time, right? So say the home is $350,000, right? And the highest offer is $369,000 and we pay $370,000. Well, you're like, hey, I only wanted to pay $350,000. Well, then we just don't accept. But we get the opportunity to be able to get it accepted, right? That's a big deal. Or what if we were going to go in at $390,000? We didn't even need to go that high because $370,000 was the winning price. So that has worked a lot. Writing a personal letter. I know everybody's going to do it, but it still helps. I even write a letter about myself and about my lender. I'm like, here's our stats. This is where you're going to find me. Go on Google. Go on Facebook. Look at my reviews on Zillow, even though Zillow doesn't show them all. You know, so there's different things just to show like I'm not a part-time agent. It's not. I haven't done just one deal this year. Like this is who I'm going to be. Your agent's going to be able to get hold of me day and night, because that's a big deal. Because a lot of these people go in and they're like, oh, guess what? We're not going to have an appraisal contingency. Oh, guess what? I'm like super approved. And then the deal falls out.
Yeah.
They're not being truthful. We always want to be truthful in what we're offering, but we're going to go in guns a-blazing. And I have to come in. I become a professional stalker, which you're really good at too, Alicia. And I do it in a super nice way. But it's like I have to go, okay, for the next 48 hours, family, I will be stalking.
Yeah.
And whatever I need to do. And, you know, it's like, it's the text, it's this, it's that. It's, do I need to go up another grand? Do I need to do this? Because when there's so many people wanting one home, we have to stand out. And there's only one way. It's relationship and showing how strong we are and money, right? So those are just a few things. You have to be approved beforehand. You don't have to have a ton of money. We're getting in somebody in a home right now with 0% financing. 100% financing, 0% down.
Yeah.
Right? So you don't have to be like really cash heavy. I know a lot of people think that.
No, I always quote, you gotta be able to come up with about $2,000 is the lowest. And the reason I say that is an appraisal is about $450. A home inspection, when you're lucky, is about $500.
Okay.
And then $1,000 earnest money deposit is probably one of the lower amounts that would be accepted right now.
Yeah.
It's normally 1%. So the fact that if you could at least come up with 1,000,
if you can get
just
some
skin in the game.
Yeah, or have grandma lend you a little bit of money or something.
No, in talking about that, because a lot of times clients go, hey, 2,000 ain't easy for me to come up with.
Yeah.
And so I was just talking about that with my team, and we want to help you guys brainstorm. So I have literally had clients sell their lawnmower. I know that sounds so goofy.
No, I love that.
But you could sell furniture, literally, and you basically can produce a Craigslist ad, and that will suffice. That's almost like a Kelly Blue Book.
I love that.
Because normally cash isn't acceptable.
Yeah.
But if I can show, hey, here's the receipt for the couch they bought. Yeah. And, they call RC Willie and they're like, hey, remember this couch I bought 3 years ago? Can we have that receipt? And they store your information. Then you show a current couch similar on Craigslist, and then it goes with the bill of sale.
That's
now
so
I can
good.
Document that money. Well,
so
once
good.
you get into the home, you can do the same thing, and you can buy cool stuff on Facebook for super duper cheap.
Oh yeah.
But all you need to do is come up with about $2,000. Any vehicle that you own that's free and clear, get a loan. Call the bank. Hey, can you put a loan on this car? They will absolutely lien your car. And great, if you borrow $2,000 on a car, you might have a payment of $150.
Such a good idea.
Well, if you don't have the $2,000, there's ways to come up with the $2,000. Now, a lot of times people don't think, or they think, my family doesn't want to help me. There's no way I could ask my mom or dad. They don't have that lying around. You will be surprised.
Yeah.
You will be surprised. One of parents, life goals is to help their children, from my experience. And a lot of times they don't feel like they really can. Or they don't think their kid wants to take that next scary step. And maybe they don't own a home themselves. It's not something they've ever done. So when you call your aunt, uncle, grandpa, grandma, parent, and you say, hey, we actually are thinking about buying a house. We're going to get, $1,000 refund from this apartment when we move out.
Yeah.
We're only short another $1,000, let's just say. Is it something you could help us with? They will pinch their pennies because they are changing your life.
Yes.
And it's actually a gift to them, believe it or not. And you don't have to feel like you owe them, because truthfully, it is a gift to be able to help somebody you love.
So true.
It truly is. So I've had clients who are like, I never thought in a million years my uncle would help me.
Yeah.
But thank God you talked me into calling.
I love that.
And I do. I recommend it. I'm like, reach out. Don't be shy.
Good for
because
you.
It's a gift to people to be able to give and make a difference. And if they feel like they truly changed your life by helping you get a house, it's a gift. It's a gift to them.
And $2,000 can make all the world the difference. We see that every day.
Yeah.
It can make or break you getting a home.
No, I highly, I don't recommend getting like a cash call loan, people, because those are 20% interest rates.
Are they really?
Yes, they are. And so, but if you do have to do some kind of a loan or a credit card or whatever, you have to let that money sit for 60 days before you can use it.
Okay.
So if that is a way you resort to getting the funds, whatever, let it sit for 60 days. But there is down payment assistance out there right now. And there is 100% financing out there right now. So the good news is as long as you can come up with that $2,000, the rest, we got you covered.
Yeah.
There's a really cool program everywhere covered in California called CalHFA that you can utilize. And there's also one called USDA. So there's multiple different 100% options out there for clients. Now, before I get so excited on the first time.
And we love first time buyers.
That is my passion.
They're our jam.
And like I said, I do love helping the little guy. One of the things that I was really excited about recently is just bringing up some of the new flexible programs that are coming back out.
Yay!
And one of the biggest ones I thought was so magical, because a lot of people during this COVID, pandemic, their income has been a little like spotty or flexible, or maybe they chose to stay home more, and they had money in the bank, so they didn't have to go hit it hard in this time. But, on paper, we as the bank will see a dip in their income.
Yes.
So recently, for those of you out there who always wanted to get into the market as an investor, they recently have released another loan out that you can use just the rental income and the rental income alone to qualify to purchase a rental property. So your personal tax returns are not even required.
How?
Yeah, they do not look at your income. They do not look at your monthly paychecks. They ignore all that, believe it or not. It is a 20% down program. It's 25% with as low as a 660 credit score. The reason that part's so important is because normally these are not available for people unless you have a 700 credit score. So it's more, the high income elite out there that are rocking credit. Well, guess what? What if the little guy wants to buy a rental?
Yeah.
He's never owned one in the past. You are good to go as long as you have 25% down. So you can get houses out there still for low prices if you're open to the where.
Absolutely.
Yeah, if you're open to the where the location is, there's a lot of houses that are reasonably priced.
Absolutely. Under 300.
Under 300.
Yeah.
So as long as you have a 660 credit score and you've saved 25% down, you can get a rental property being a first-time investor, and again, not using any tax returns or personal income to qualify.
Huge. I love it.
It really is. A lot of people, maybe they didn't stack the cash their whole life. They're not sitting on some gigantic 401k, and they really are trying to leave a legacy for their kids, but also build a retirement for themselves that they can live on once they do decide to stop working. And so rental property has always been one of those things that as long as that property is cash flowing, and that's part of the program, they do require that the rental income on the property covers the mortgage payment.
Yeah.
So that's kind of the whole point.
Okay.
Now the cool part, and one of my biggest recommendations to everybody out there, is if you can get your hands on a duplex.
Yeah, I know.
If you get your hands on a duplex, I look at it as a 2-for-1 sale, okay? You've got twice the rental income with one payment. You're definitely going to be guaranteed in this program to cash flow.
Yep.
But the cash flow amount goes up tremendously. So we had a rental property we bought in Rockland a couple years back. Bought it for $430. Put the 25% down. The mortgage was only $1,600 a month. Easily, it would rent for $3,000.
Wow.
Automatic cash flow $1,400. Now that's what I'm looking for those of you out there that want to build an empire for yourself. And you've been able to stack some cash that you thought, okay, I'm going to put this aside. This is ideal for you to use it. For. And one thing this leads me into that really excites me, and I don't know about you, but I've been getting this question a lot. Is it a good time to buy?
Yeah, I get that a lot too. I want to, just before you go into that, on the second unit thing, the state of California has completely changed guidelines. So if you are sitting on property and you want to add a unit, it doesn't matter what your county says, your HOA, all those accessory dwelling unit guidelines have changed because we have a housing crisis. So if you need to add,
what's the difference?
Now you can add second units. Before, remember, if you only had an acre or under 2 acres, it couldn't be more than 1,200 square feet. If you're over, none of that. If your HOA says you can't have a second unit, you can now. You don't want to change. There's certain things. It depends if it's attached or detached. I could go over it with you if you want more info.
Please,
but I took a whole class on it.
One.
Yeah, no, absolutely. So if your HOA is like, nope, this is always going to be a single family residence, what the state says is okay is now superseding that.
Wow.
Yeah. Because we're in a housing crisis. We need more homes.
Yeah.
There's nowhere for people to live. The rental market's off the hook. It costs more to rent than it does to own.
Now, just to be crystal clear, a duplex is different than a single family with an accessory unit, or what they call a granny flat.
Okay.
You can get your standard, phenomenal, best rates in the market loans when it's a single family residence, even if you added a granny flat.
Okay.
That's different than a quote unquote duplex.
Love that.
A duplex, yes, that requires 25% down, but a single family residence with a granny flat does not.
Okay.
You can do as low as 3% down.
Okay.
Or you can get the 100% financing in the USDA.
That's USDA. I love that. Do you want to end us with your shebang?
My shebang.
Shebang. Shebang.
I forgot what I was going to say.
No, it's your special thing that you calculate for us.
Oh my God, okay, so I'm so excited. Okay, so I always joke, and I was just saying, my fiance says I'm like 50 first dates.
I love that. Thank you, John. Thank you, John, for giving it a label.
Okay, so I'll re-talk about the same thing over and over again, but hey. So basically, when somebody asks, is it a good time to buy? Here is a phenomenal little equation for you to figure this out. So let's give an example of a home for $450,000.
Okay.
Even if you just put down 5%, which is $22,500.
Okay, ask Grandpa.
Right?
Yeah.
So 5% down on $450,000. As long as that home appreciated a minimal 2% per year.
Oh, which we know. I mean, just during COVID, it was 5.
Just during COVID, values have gone up 5% in this area. But I'm going to be really conservative.
I love
I've
this.
seen Placer and Sacramento counties go up 20% a year, and I've seen it be 4% a year. So I'm going to be conservative, so it's a guaranteed, right? So people out there know I'm not blowing smoke. If your home just went up a measly 2% per year over a 5-year period of time, you would have gained 10%.
Okay.
So you made 200% of your money.
Wow.
Okay? Now, if we break that down to an annual amount, that's 40% rate of return per year. 40%.
Wow.
I don't know about you, but my 401k ain't doing that.
Yeah. No, I love it.
So is it a good time to buy? A lot of people waste a lot of time worrying about making it the best possible time
they
ever.
do. They really do.
And they think that from one month to the next, that's going to make a difference. I'm telling you that it is not. I'm telling you that if you wait, no matter what, the homes are going up.
Yes.
What's protecting us, and we were going to hit on this, what's protecting us over many other areas is that we here in the Sacramento-Placer County area are so close to the Bay Area. And the Bay Area, like I have repeated this story I don't know how many times, but my sister is currently selling her townhome for 1,700 square foot in Santa Clara for like 1.7 million or something psychotic.
Good for her.
Here in Placer Sacramento, you could buy one here for like 300.
Oh yeah.
400.
For 1.7, she could buy a 7,000 square foot mansion on 3 acres.
Right. And honestly, she's planning on that.
Good for her.
They just listed their house right now.
Good.
And they're one that wanted to time it all right. And the truth is, it's like, what's going to protect us is even if the Bay Area starts to crash in value, and even if they start to go down, because we all experienced this back in 2009, you know, when all this was happening, and a lot of people are fearful of that, of Placer County doing that. Well, one great thing about this area is we have controlled, and the government has controlled our appreciation with interest rates. And it's kept us at a very healthy, gradual appreciation. There hasn't been the drastic 20% increase per year. It's been very, very controlled. And so it's been very gradual, and we are still, like I said, under 50% of what the Bay Area is selling for.
Yeah.
So those clients in the Bay Area, they're flocking here. And you and I were going to talk about everyone moving out of state as well.
Yeah.
But they are going to give us at least, the predictions are at least 5-year security on our investments. So if you're thinking about buying in this area, now is a phenomenal time.
I agree. And even if we say we do see a shift, I mean, who knows what's going to happen with the election? I get a lot of these questions every day. You're all in a fixed rate. We're not going to see what happened last time. People are not in adjustable rate mortgages with interest rates imploding, right? I mean, we're not doing that anymore. So, you know, during that time, I bought a home at 510 and had to sell it at 240. We're not going to see a 50% depreciation. No. We may see curves and shifts, but we see that all the time. That's just the way the real estate market is. Get in your home now, get your locked rate, you're in, right? If you want to sell in 2 years, you can sell in 2 years. But if something shifted, then we just write it out and then wait till it comes right back. So we're here always for you guys. We're excited about our podcast every week, and we're your crazy wild cowgirls in real estate.
And next show, we're going to really hit on self-employment. So if you're self-employed and you wonder how you fit into this market and how you can benefit from this market and how you're going to qualify, tune in.
Yeah, get all of your business owners out there, coffee shops, all of our friends are out there hustling. Realtors. We want to help you. Yes, realtors,
Your 1099 independent contractors, we are going to target you and really going to tell you how to maximize in this market.
You can own a home. Have a great day.
Talk to you soon.